So let me start by saying I purchased GLD near the year-to-date highs recently at $194 a share. It's over 5% down since my purchase. As much as the stock market's flirting with year-to-date highs again, what's happening with gold and silver? Is it time to buy? Is it time to sell? Or is it time to just dump it and move on? Well, we're going to find that out right now. Hey folks, Tom Gentile, welcome back. It's been a while since we looked at this sector of the market. So this week, I want to update you with what I see in precious metals, as well as how I'm approaching this sector. So let's start with some recent news around the metal. The first chart I want to show you is a chart of not gold, but United States Oil Company. This is a USO. Precious metals have taken a back seat to oil and gas, which has seen run-ups as much as 30% this summer alone. Now, this is because of a combination of things, the tightening in the Middle East, along with our administration's recent move to cancel drilling in Alaska. So what does this got to do with gold? Well, putting one commodity on the front burner does take the edge off of buying another. Take a look at this chart. This is UUP, the double dollar index. It's running hot as well. One quick look at this chart, you will see the year-to-date highs that were just put in a day or two ago. In case you don't know, UUP is an exchange-traded fund that tracks the value of the US dollar relative to a basket of 6 major world currencies. Currencies like the euro, the yen, the pound, the Canadian dollar, the Swedish krona, and the Swiss franc. It moves higher or lower against these currencies. And looking at it right now, it looks like a good time to get up and travel abroad. UUP is up about 7% since just the beginning of July. Also bad for gold. And then there are these metals mining companies. Now, this is just a few of the list I look at. I actually look at about 70 of these in the gold, silver, and precious metal sector. The last quarter, well, a lot of them have either missed their latest earnings expectations or their future outlooks have been revised downward. Another sign that gold has been slumping this quarter. And the last thing I want you to look at is the seasonals. Take a look at this. September is a terrible month to be long precious metals. In the table I'm showing you right now, I ran a 10-year study. This is a seasonality study for September, starting on September 1st. And check this out. An average of 90% of the time, gold has fallen in price since September. Judging by all this data, you might think it's just best to turn away and run from precious metals. Remember, that's what the market wants you to think. The worst time to do something is when everybody's talking about it and either your fear or greed is off the charts. Think about NVIDIA and how everybody plowed into the stock around $500 at the height of AI once it released its latest earnings announcement. Now, I want you to also think about Tesla when everybody was dumping it, not only last year, but more recently, just before it went up 10% in one day. The majority of people try to trade the markets by what they think is going to happen. And guess what? They're usually wrong at both ends, which brings up my chart of GLD. So here we go. And on first glance, GLD is in a downtrend from about 190 down. But further investigation shows two things. First, a double bottom around the 175 area. This is potentially a bottom, but also a higher low that is now forming. Now, if I were to add things up after what I just showed you, I'd say a triple bottom is more likely before a move higher. So what points to a longer term move higher and what can we do about it? Just some bullet points. Number one, news. First, commodities like oil will mean revert, which means dollars will come out of this commodity and they will be deployed elsewhere. That's good for gold. Number two, the US dollar can't go higher forever either. That's another important point because even a pause in interest rates will send this lower against foreign currencies. And finally, seasonals. I mean, September is a bad month for gold, but the end of September means a change in the seasonal patterns for gold, which tend to move higher into the end of the year. So the million-dollar question is, where am I buying gold? Now, full transparency, I own GLD and I own some gold, and my family also owns it, but for today's purpose, I'm going to be looking at buying GLD at $175. Now, this can be done with a limit order. Here's an example using Robinhood. And also, let me be clear about something. I don't endorse any brokers, so whoever you use is up to you. But I'm showing you here today how to orders placed using Robinhood and using my Robinhood account. Now, notice I have limit orders by type, My limit price is $175. It's a good till cancel order, but Robinhood cancels the order in 90 days if I don't do it ahead of time. So there's a chance I won't get filled on this. But another way to do this would be to buy gold and, more importantly, get paid to buy gold at 175, regardless of what it does and whether it hits this level or not. You want to know how to do that? Well, I'm going to show you that next week in part 2. I'll see you then.